Welcome to Electrified. It's your host, Dylan Loomis. Happy Friday to all of you, and a quick shout out to my new or updated patrons, Jeffrey C., A Big Triangle, Jamie S., and Dominic D. Greatly appreciate the support. First up today with the GM, it looks like the Hummer EV has rolled off the line, and it's being reported that this is a customer delivery, which is definitely a big milestone, but let's just keep in mind this is one, and thus they have a long way to go. And although this vehicle probably won't appeal to the masses, it's a very important vehicle nonetheless because it's the first on GM's Ultium platform, which is their motors and batteries that they have talked a lot about and is a huge part of their electric future. And GM still has not said how many reservations it's received for the Hummer EV, and it still starts at about $113,000. Another crucial thing to watch here that definitely needs to prove itself is these pouch cells that the Hummer EV will use. GM has said they're unique because of the large format pouch style cells, which can be stacked vertically or horizontally inside the battery pack. And the Hummer will also be the first vehicle in GM's lineup to feature its wireless battery management system. But for me, it's really about these pouch cells because what other vehicle uses them? Well, the Chevy Bolt. So when these first started catching fire, GM and LG Chem attributed the problem to a defect in the way the pouch cells used in the Bolt were manufactured at one factory in Korea. Now, no, just because they were a problem before does not mean they have to be now. However, it is something to watch. But speaking of something to watch, check this out. Thank you to MarTN on Twitter. So I have to admit, that's very cool, and I'm starting to see how it could be very useful in parking situations, among others. Yesterday, Elon did exercise and sell some more shares, so as you can see, he's now roughly 3/4 of the way through, so hopefully all of this is wrapped up in the next few weeks. Now, speaking of that, Tesla is expected to have a blackout period, and this was shared by Dave Lee on Twitter, so it's supposed to go into effect today and last until January 28th, 2022. So at first, a lot of people started saying, well, now Elon's not going to be able to sell for a few weeks because of this blackout period. But as you can see here, the blackout periods can significantly limit the windows of opportunity when insiders can buy and sell stock. Fortunately, 10b5-1 plans, which is what Elon has been using, allow insiders to trade during blackout periods without violating insider trading laws. And just to be clear, Dave Lee did confirm this later in his tweet thread, but I just wanted to point it out in case you missed it. And these blackout periods are just a way for companies to limit the trading of company stock for insiders, executives, or even employees, typically around earnings releases, just in case they did have insider information, almost as a way to protect them. So essentially from market close today until January 28th, no discretionary sales for Elon. However, he could still execute sales if they were already predetermined by his 10b5-1 plan. Last night, Sawyer broke the news officially. Tesla Insurance has launched in Illinois, making it the third state behind California and Texas. Now, he said to get the new real-time driving behavior-based insurance, but he later clarified that California does not get the real-time driving behavior-based insurance. You can only get regular Tesla insurance in California for now. Here you have it. Get competitive rates in California, Illinois, and Texas in as little as 1 minute. Now, a few things to point out here. First, I'd like to run through this example and then point out a word of caution. So, Geico quoted somebody $500, State Farm was $220. The first 2 months of Tesla insurance were $145 with an assumed safety score of 90. The next month was $117 with a score of 95. So yes, your safety score will impact your premium. And then this month it was $94 with a score of 99, still driving like they always do. So this was a friend with a Model 3 Performance saving $125 per month, switching to Tesla insurance from State Farm, which previously was the cheapest option. Now, this all sounds great, and there is plenty of this on Reddit and on Twitter of people just saying how much they're saving. But guys, you have to remember, you have to compare apples to apples. So what are the policy limits? What is the deductible? What are the coverage limits? Like, there are so many things you have to factor in that most of these posts are not considering. So please just remember that as you do your homework, make sure you're covering the same policy coverages, not just numbers on a piece of paper or on a screen. But even still, what Sawyer said remains true. Tesla insurance potential is so underrated. I concur. And this is another thing that people have to consider. How much do you want to pay attention to your safety score? Because as you can see, safety score for the rating and the monthly premium, in this case, it changes anywhere from $83 a month up to $130 a month. So that's a difference of $50 per month from a safety score of 88 up to 98. For some people, they don't care. They'll drive however they need to save money, and that's great. But for other people, they're not going to want to watch and monitor how they drive so carefully and have to worry about their premium fluctuating on them every month. So it is what it is for now. Here we get an anecdote that Sheetz in Pennsylvania might be getting Tesla Superchargers. Maybe this is just for me because I am from Pennsylvania, but I would love to see Superchargers at Sheetz, as this is one of the main gas stations in our area. So let's shift gears to Rivian. As you can see, down 10.8% so far on the day, under $100 per share, presumably after the earnings report last night. Now, I did listen to the call and I took some notes, so I'm going to give you all of the most important points. Like I said, I wasn't really that worried about financials. I just wanted to get an idea of the more important things, the production ramp, the battery strategy, and all of that. So here you go. Most likely, the main reason Rivian is down today is they said they're going to fall a few hundred vehicles short of their production goal of 1,200 units in Q4. So far to date, they've produced 652 units and delivered 386. They have 71,000 R1 pre-orders, so both the R1T and R1S combined. Their new factory that is supposed to be east of Atlanta is going to start construction summer of 2022 to produce the next generation of vehicles. They're going to start selling vehicles hopefully by 2024, and this new facility should have an eventual capacity of 400,000 units per year. They said eventually they're expecting to have battery cell capacity come from this facility, but to start it will be just cars. So the battery cells probably not expected from this new facility until 2025 at the earliest. Right now they said they're working through battery module constraints. Each battery pack for Rivian has 9 modules. Each module has 864 2170 cylindrical cells. Right now they have 3 separate battery lines that they designate 0, 1, and 2. Line 0 is where they develop the cells. Line 1 is their fully automated line. And line 2 is basically coming up right now and is expected to produce higher volumes. And one of the questionable decisions, at least so far, that Rivian has made is to ramp the R1S, the R1T, and the EDV all at the same time. Either way though, non-employee deliveries of the R1T has started. The R1T and the R1S actually share the same manufacturing line. They ramped them together, and RJ did say that this was harder than they thought. And with these 2 lines for the R1 series and the EDV, the delivery vans for Amazon, they're looking to expand from 150,000 capacity up to 200,000 capacity with these 2 lines. So for their battery strategy, it's basically in 3 phases. 1 is going to be sourcing existing cells with Samsung SDI. These are heavy nickel content 2170s. 2, they're going to co-invest with cell suppliers to build more capacity. They have not yet named those suppliers. And 3, vertical integration, taking a page out of Tesla's book. RJ said they have been working on this for some time, and they're looking to have a pilot line starting late next year. And the last thing in terms of software as a service, right now they have Fleet OS live right now for Amazon deliveries, and on the consumer side, the membership is complimentary for 1 year. It will go to a monthly fee after 1 year. They did not name a price. It'll cover things like connectivity, charging, but they are continuing to build out more features, and they're working on other software bundles as well. But back to Tesla, it looks like they are trying to roll out active noise cancellation, which is a very tough feature to implement in just the S and X for now. This will not be coming to the 3 and Y, at least not yet. In the release notes, it said your vehicle now has the ability to actively reduce low frequency road noise while driving on rough surfaces. To accomplish this, the system uses seat microphones to measure the noise in the cabin, then generates anti-noise through the speakers to create quiet zones around the occupants. And here is a screenshot of the audio settings. And here you have it. Tesla is installing these active noise canceling microphones or speakers in the vehicle's front seats as part of the Model S and X refresh. These components are not installed in the 3 agree and why. From Tesla Adri, it looks like there's a new wallet section in the account on your Tesla app, so you can manage different payments if you'd like. Smoky Shorts on Twitter shared some good images of the Don't Mess with Tesla Texas belt, so I figured I'd share these in case you missed it. And everybody, please remember context matters. So Tesla Truck Club shared, Tesla gets $64 million in tax incentives over 10 years to build a 10,000 job factory that will be completed in less than 2 years start to finish. Talking about Giga Austin. Ford, on the other hand, gets $884 million in tax incentives to build a 6,000 job factory that will be completed in roughly 4 years. Guess which one people get worked up over? He hit the nail on the head with that one. Here we have some ridiculousness. Bloomberg Law is reporting that there is a new lawsuit against Tesla based on, you got it, Elon Musk's tweets. There was a lawsuit filed in Delaware against Tesla yesterday. So it's accusing Elon of continuing to tweet impulsively and recklessly in violation of a 2019 agreement with securities regulators that required the company to adopt strict new internal oversight procedures for monitoring his online statements. And yes, this lawsuit is seemingly coming from one Tesla shareholder. And the lawsuit says there's a credible basis to believe that Tesla is, among other things, being mismanaged. So here's the actual lawsuit. I will link it below if you're interested. Coming from David M. Wagner, the plaintiff, and Tesla is the defendant. So apparently earlier this month on December 2nd, the plaintiff wanted to inspect certain books and records of the company and its former entity. The plaintiff's demand was and is necessary to investigate potential wrongdoing and to safeguard the interests of both the company and its stockholders. But Tesla did not give this guy access to the book, so now he's filing a lawsuit. But here's what it is right here. This is the heart of the lawsuit and why it's completely bogus. So he said, Musk has a long history of using his Twitter account and tweeting statements that have a significant effect on the company's stockholders and the company's stock price. So if you're worried about the company's stock price since this whole SEC thing back in 2019, let me show you something. So from the first week of January 2019 until today, Tesla stock is up about 1,359% or $852 per share. So I think whatever Elon is doing is quite all right. And the fact that this gentleman wants to bring a lawsuit against Tesla as a Tesla shareholder, with this being the Tesla stock performance, is just crazy to me. I think people have way too much free time, but that's just me. What do you guys think? All right, we got to move on. So very abruptly, just like that, the CEO of GM's Cruise has left the company. No explanations have been given. So all we know right now is that the CTO, Kyle Vogt, will take over as the interim CTO. Vogt was a co-founder of Cruise and has previously served as the CEO. And since acquiring Cruise, GM has invested billions in the operation and brought in investors like Honda, SoftBank, Walmart, and Microsoft. Now, the easy conclusion and what most of the Tesla community is saying is that, well, Cruise was doomed to fail, so he just left before things got bad. Sure, it's possible and probably even likely, but it could be any number of reasons. He left for a better opportunity, a family emergency, who really knows? All I'm saying is let's try to reserve judgment until we know all of the facts. However, right now on the surface, it definitely looks bad. But today is Friday, so let's take a quick look at Tesla stock. So these yellow lines are each day that Elon has exercised and sold his shares. So it's very, very obvious that from the peak of Tesla stock price, since Elon started selling, there has been this downward pressure. When he stops selling, it's been temporary alleviated right here, and then he sells, temporary alleviated, and then he sells, temporary alleviated, and then he sells. You get it, you get it. So if you're somebody that needs visual confirmation, hopefully this helps. But removing Elon's sales, now this yellow line is just the beginning of the week. So Tesla stock opened roughly around $1,000 per share, and at time of recording is currently trading down about 5.29% or $52 per share on the week. And Tesla stock has fallen below the $1,000 level that was serving as support, and a lot of people were expecting it to fill the gap. So what that means is if you look over here, you can see how Tesla stock went from about $900 a share very quickly up to 1,000. So from 900 to 1,000, there's not a lot of trading activity taking place in this range, which means when you break below a certain level, it could mean that this area can serve as a vacuum and that Tesla could fall down to 900, if not, closer to the 880 range. And remember, none of this is financial advice, but I just have to say it. If Tesla goes below $900 per share, that would be such a great buying opportunity. So in that event, Thank you, Elon. But we'll see if Tesla can carry its positive momentum for the day through the close. But that's all for today. Please take a second to like the video if you did. Hope you guys have a wonderful and safe weekend, and a huge thank you to all of my Patreon supporters.